Hey guys, and welcome back to the ASX Investor channel, and welcome to another ASX CEO interview. Really looking forward to bringing to you a fresh story, one that we haven't covered before. We'll be talking about the iconic brand Cash Converters. I'm sure many of you might be familiar with the name, but Cash Converters is not only the retail store offering that I'm sure many of you know and love, but they've got a big, broad offering exploring into technology, leveraging data, and really focusing on a range of new products that we'll continue to explore through this story. We're welcoming to the channel the CEO, Sam Budiselik. It's an exciting story. There's been a big transformative past year, and we're looking forward to unpacking it all. Sam, welcome to the channel.
Thanks so much for having me. I'm excited to be here.
It is an absolute pleasure. I think we'll discuss all of the recent news flow and the announcements, but I think when we get into it, maybe a bit of an overview about who is Cash Converters, what is that ASX CCV story, and what's the problem that you're trying to solve at the core of it all?
Yeah, thank you for having me. It's great to chat about, our new company, really. And I say that in a way that's remarkable because Cashes has been around for many years, as many people would know, really on the high street and probably familiar with the store network at some stage, buying or selling goods. Cashes now is very different. So I'm kind of thinking about Cashes as a V2.0. And, in this fintech environment, rapid innovation and tech deployment and development, our business is one that's really had to respond as well. It's a traditional business. We've really looked forward as to how do we engage online digitally with our huge customer base. So, we're really fortunate to be able to now talk tech. We've got a great platform. I've worked around the world on different sort of platforms, and this is the best I've ever seen. So how do we take our tech now and reach our customers in a new way? And particularly with COVID, with people being more comfortable transacting online and dealing online, we've really had to focus over the last 2 years of, relaunching our business, really, to be honest. So that now stands us in great stead with a new app and new product coming through that's all sort of generated from a big push to analyze our data and build better product for our customers and digital channel going forward.
Can you just walk us through 3 pillars that you have at the moment? So, of course, you've got the in-store retail, you've got the vehicle loans, the personal loans. Can you talk about those pillars and how the offering's broken down?
Yeah, look, our products are really, personal loans, in-store retail, and vehicle loans, so secured loans. Each of those channels operate in-store and online, but obviously growth is really coming online. So I think as someone sort of thinks about a cash need, I need, $1,000 or $2,000 as a personal loan. You can borrow through our online platform or app and have a personal loan that sort of repays over time. If you need a vehicle loan, you can jump on and you can say, look, I need a vehicle loan. I'm going to buy a car. Tends to be $10,000 to $15,000 car purchase. And I want that finance approved so I can go out and buy a car. And then stores, you can wander in, if you want to sell an item and, meet a cash need by selling something, you can do that. If you're value conscious, environmentally conscious, you can come in and buy a reuse or a circular economy sort of transaction, buying an item, selling an item. So, put pretty simply, the business is really meeting a cash need primarily. And then the retail part of the business that probably traditionally Cashes was known for, primarily, has really become a secondary element of the business now. So as we've morphed into a lender, and we've really focused online and built that technology, that's the core part of the business now that really drives our earnings and our revenue profile as a result.
Yeah, it's a comprehensive offering. So it's interesting to hear 18 countries. I think there's around 150 stores in Australia. And then you've got the vehicles and the personal loans. Are you able to break down some of those revenue numbers across the board for each of those areas and what proportion of the total group they make up?
Yeah, the overall business does about 200 mil of revenue a year. That drops down to around about a $50 to $60 million EBITDA and a $15 to $20 million net profit number traditionally. Obviously, with COVID, we're sort of at that level and looking to grow out like many other businesses. In terms of the contribution, it's really 95% domestic Australian earnings and focus. With the international business, as a result of it being a franchise model, it's a royalty receipt for brand, platform, trademark licensing. So it's a smaller part of the business. So we really focus on the Australian opportunity. Out of the adult population, there's 3 or 4 million Australians that are in that sub-near prime sort of market, where they are looking for alternate finance providers, don't want to deal with the banks, need that quick tech interface to make life easier. And we play in that space in the domestic market. So we're very focused really on the lending element or the cash solutions element of the domestic Australian market.
And I think it's interesting, actually, just reflecting on, of course, the past year, there's been disruptions to all types of businesses. Lockdowns were not easy for anyone, but thinking about how it's actually affected your business, I heard that initially you anticipated that maybe the loan books would grow as people needed some loans to navigate through the period, but you actually saw with the strengthened household balance sheets that people were paying down their loan books, and that was actually flowing through to the retail stores as well. Can you talk about the past year and how it's been and how those trends have played out?
Yeah, it's fascinating. I mean, I've been in the business for about 5 or 6 years, but I took the CEO role on in February last year, which was, little did I know, sort of facing into that COVID. I sort of think about it as April being really sort of significant. Operating a physical store network, having a lot of staff out in stores, it quickly became a case of, look, how do we make sure our people are safe? How do we, which stores do we have to close? Are we closing them all? You can sort of imagine as a physical store operator, like many other businesses, that was quite a confronting challenge. I think fortuitously, as we had spent a lot in the preceding years on our tech and our platform, we were very fortunate to be in a great position to continue to serve the need online. And that investment was happening anyway, because as I sort of touched on, I think as we took a traditional business model and we looked forward, we were pretty early to realize that the value of our business really sits with a big data warehouse. So every unsecured loan application that we have will do a responsible lending assessment on. So we need to look at the bank statements, determine income and expenditure, take the credit file, read that data and make a lending decision. And that really gives us an advantage to look into our part of the economy and understand borrowers. Almost, if you imagine a mate coming to you and saying, can I have $500? Would you lend that mate the money? We do that on a massive scale. And obviously without the friendship tie-in where you might have some obligation to pay, we need to get a read on that, the applicant and determine whether they'll repay us. It's not good for anyone to sort of get into a position where they can't afford to repay. So I think a lot of the investment happened under the hood. All the terms you hear around AI and machine learning, and I've learned a lot about that myself over time, being a finance guy, not a tech guy. But it's really important to somehow then productionize that and make it a great customer experience whilst meeting your regulatory obligations and analyzing all of that data and coming to a lending decision really quick. So I kind of think the engine was built. We had a really, I've worked in some of the global investment banks. When I came in, it was remarkable. I thought the tech stack here, we're all cloud, Microsoft Azure, great tech platform as an employee, but the customer assets that we started building, the website started, it became a mobile rendered sort of experience that becomes an app. The pace of change has been phenomenal. So having had that built, enabling our customers to borrow online, to repay, to manage their loans, it was just a great time to sort of have that tech ready to release. And that accelerated many different things for us too, like a number of other businesses. So we added a number of repayment functionalities and collections enhancement tools to allow customers to interact with us online and digitally. And then as a result of that, we sort of managed to maintain continuity through this period. But I think at that March, April time, I became concerned that prior to the government sort of announcing a big stimulus package, that people would be entering a period of uncertainty like we were. So the employment outlooks became quite specific sector-based decisioning. If you're in tourism, hospitality, we were sort of putting some credit overlays on that and just pulling the handbrake a bit, going, let's just see how that plays out. Thankfully, I think fortuitously, the government, there's been a bit of criticism about waste, but the massive flood of stimulus meant we sort of had the opposite problem in the end, that the demand for credit wasn't really there. So people got locked down, stopped spending, received government support, rightly so, where needed. Demand for credit really dropped away across the whole market, as you will have seen, and our loan books really paid down. So where we sort of had a $240 million loan book, it quickly became 170 million, and that was a different challenge for the business then. We had a lot of cash, a lot of people repaid their loans, a lot of cash came in. We ended up with over $100 million of cash on our balance sheet, which was crazy. But it put us in a really strong position to then start to digest what was happening and then to start to think about how we moved out of that crunch. And, towards the end part of the calendar year, we really saw lockdowns lifting and people spending and things coming back. And we started rebuilding our books off the back of that. So, everyone talks about unprecedented.
You also talked about the fact that the technology was built previously. So the technology is now, the platform's even more enhanced. You've optimized your cost basis as well, more lean and efficient. Can you speak about what this technology platform and the innovation and data will help to unlock? Of course, it helped with the transition last year. You're able to service more customers online with the lockdowns, but I know that there's focuses on development of new products and early wage access scheme as well, potentially. So can you speak about what happens moving forward from here now?
Yeah, we're really focused on, understanding our customer need. And I think a lot of people talk about it, but with so many customers, we've got this really rare opportunity to get to the forefront of this part of the economy and determine how people are responding, how they're traveling, what their outlook is and what they want to do going forward. We then there's a human element of that, obviously, which is really important in this day of data and tech. Then with the big data pools, we can run our machine learning to start to determine, based on spending patterns, how people are behaving, and take it to a predictability sort of level. Start to predict what people will do based on our book. So big data trove is really important, and it's sort of like how the credit bureaus operate. They actually charge us to run a query, but what they're doing is building a profile of the consumer. We've in our part of the economy, because it's not covered by the big bureaus in detail, we've built our own sort of warehouse and insights. So you kind of take those two elements and you think, look, we're talking to people, we're looking at what they're doing, we're predicting how they're going to behave. It becomes a bit of a fusion then to allow you to start to predict what needs will be and then develop products. So, unique. This is why I love finance, I think, because being a bit of a quant sort of guy, it really gives you that insight into, product design. It starts to feed your strategy. Now, with the advent of buy now, pay later, which we all know has been a spectacular success in Australia, and the use of certain exemptions under the Credit Act to create that product, was really clever. And I think, we're looking at that and trying to take some inspiration from that as to how can we do what we do better? How can we make it simpler for the consumer? How can we reduce costs or loss? Because, really the cost of credit is due to the loss profile. How do we build a better product and set and business over time? So looking at the earned wage or early wage access space in the US, it really took off. And without going into detail, there's an exemption under the Credit Act, which is saying if you're charging a single 5% amount on a loan that's under a certain time frame, you don't need to run all of the checks and balances that you would normally need to run on a longer term loan. So what we've done is said, look, if you borrow $100, it's a part way through your wage cycle. You've earned that $100, you can borrow that, you pay back the 105 when you're ready. But what we've done is added a layer using our tech of just protections and suitability assessments. So not only, yes, you can have the money, but, is that meeting your need? Is that the right thing for you? And over time, likely you've got a different need that needs a longer term cash solution. So that's sort of how we're thinking about that. But what I think with a big software house, with all of our developers sitting, in Australia, working with our business, we can quickly build product. And the EWA release that we're calling it Pay Advance, Cashy's Pay Advance. We've just gone into pilot yesterday. So we've built the tech and written 200 of these. It's really exciting. But it then allows us to really think about, what do we build next? Because yes, we can build it. Yes, we've got all the data. And the insights that we're now seeing are starting to sort of build that future product development strategy. So it's a big launch for us in terms of having spent many years rebuilding our tech, our platform, our underwriting and assessing approach, to now launch a new product, start to grow new customer numbers, move into a different part of the customer sector that we're dealing with, and do a better job of meeting the needs, sort of wowing our customers, saying, look, you were paying this, it was a higher cost product, we've redesigned things, we've restructured things, you now qualify for a lower cost product. I think it's a pretty good outcome. And ultimately, let's move right away from that stigma of payday lending in the past and how certain operators have behaved. We want to set a new standard and lead the market
Yeah, it's a fascinating initiative, and it's definitely compelling to be able to leverage that big data trove that you have. Looking forward to continued innovations moving forward as well. I'd love to ask, so of course, over this past period, we know that retail stores have been locked down. It's been difficult, but we also know that you've had that ability to get online, continue to innovate. If we're looking out 12 months ahead now, we're nearly at the back end of 2021. Where will Cash Converters be sitting at the end of 2022?
Oh, I'd love to tell you with confidence. I'll caveat everything with these are my opinions, and I'm doing the best based on the information we've got in front of us. Particularly the New South Wales and Victorian lockdowns in this first quarter have been, in May, that was a bit unexpected, and let's hope we keep moving through and opening up. I think our store network is quite unique in terms of being a lender that is large online, but we do see a really important strategic position for our stores, almost like a distribution channel or a bank agent network. A lot of our customers do need advice and help, and they feel that they can trust someone in store and they don't like to trade online or lend online. So the store network, as it closed and online took a greater share and kept growing, the growth rate online sort of continued. And it's interesting just watching that consumer behavior. People got more comfortable dealing online. They had to. I think as we reopen our stores and we re-engage with our customers through that store network, it's going to be important to continue to add smaller sort of, we're calling them concept stores. So smaller stores where you can get your finance, you can trade or buy or sell high-end retail, consumer electronics and jewelry, that sort of thing. So we'll see the network continue to grow into new areas in Australia. We'll see our online business continuing to grow. Not only new product, but our existing books are growing back at a rate of knots. We're dropping some new product, and we'll meet new customer needs in the online space. And I think as we continue to develop product and release new product and seed new loan books and watch them grow, we're sort of thinking then beyond that. Where do we take the business beyond that? We want to be a 1 billion sort of market cap, and doing that by meeting a need and doing that in the right way, and then building sort of an enduring, sustainable business model. So vehicle finance is a really interesting one that a number of participants have entered into recently. We've been in the market for about 7 or 8 years, got a good head start there. So, we'll build our secured lending business out to complement our unsecured lending business. And we've got some really exciting partnerships happening just in the secondhand goods sort of trade side of things that are assisting the bigger manufacturers and retailers with their ESG commitments as we really push the reuse or the circular economy element of our business model. It'd be kind of shocking to people to hear that some of the bigger online retailers, when they discontinue a product line or they have returns, a lot of that ends up in landfill, sometimes boxed new. So, if we can help with our sort of value conscious sort of customer base, and the even dad sort of wandering into a store, going through a store going, what little treasures am I going to find? If we can start to sort of move some of that inventory through our network and stop it ending, in landfill and reusing those items, I think there's a really important sort of, environmental angle there too. So in Europe, we announced a partnership with a group called Carrefour, over 12,000 sort of hypermarket stores globally. We're in a number of discussions around that with different big Australian retailers too. So hopefully we can do something similar in the Australian retail space. So, Cashies, it just starts to feel and sound a bit different, I think, from the past. And, we just want to get the message out that it's a very, very different business model to what it was maybe a few years ago. So, as people get interested and start reading our release materials, hopefully that sort of starts to come through in the presentation materials as well.
On the journey to becoming a unicorn. It's a fascinating journey, and we'll continue to watch how it all plays out. Would love just to hear some final reflections as well.
Big legacy business, traditional business that's becoming a unicorn.
And that's one thing that's definitely stood out as well, is that real transition and the focus on moving towards this digitally focused economy. We'd love just to hear, so for those longer term shareholders who have been following ASX CCV for a while, those prospective shareholders who now might just be looking at the Cash Converter story, any final reflections that you wanted to leave with them?
Yeah, I think sort of touching on a number of these themes, we've got a really strong balance sheet. We've been in operation for many, many years. We've reinstated our dividend payment. We do make a profit. So we're acting in the interest of all stakeholders, but we're here to make a return for our shareholders. So, there's a couple of factors that start to differentiate us a bit from some of the other great, online lenders. The big customer pool of data, like I said, stands us in a really good position moving forward. So we'll look at our the opportunities we've got in front of us and the capital that we hold. It's a great position to be in as we start to think forward about, you know, inorganic opportunities and organic growth. And we're very disciplined about how we deploy our capital, and we see great growth opportunities. So, you know, reinstating the dividend, I thought was a great move for Australian shareholders in particular that love franking credits and yield. It's a 100% fully franked dividend, so you know that's nice. But the main game is really how do we then invest this capital and really get this company and continue the company growing. So, you know, look forward to a much bigger company. It's a V2.0 kind of business model, but it's backed by something that really works and a really strong business model. So there's some comfort there that what we're doing is working.
That is the cash converter story. It's ASX CCV listed on the ASX. If you did enjoy the video, feel free to hit the like button. Feel free to share it out. We make daily videos, so make sure you've subscribed and turn your bell notifications on. Sam, it was an absolute pleasure. Really enjoyed unpacking the story. Thank you so much for joining us.
Thank you for having us, and thank you for watching to your viewers. You do a great job. Cheers.